Hello, folks. Dan Bird here once again for video 2 on this Sunday, September the 10th, peak of hurricane season. So hopefully we won't get any more for the rest of the year. What I wanted to do on this one is talk about something that was sent in by a subscriber. And they sent in a question saying, it looks like, or actually sent in an article that I included in my newsletter this week that said, money supply has been declining for 6 weeks. Is that the sign that a crash might be imminent or a market decline at a minimum? So I want to talk about that a little bit. I did put it in the newsletter as well. But the first thing that I want to do, let me share my screen. I want to show you, and I've done this before, but anytime you hear anything like that, it's important to put things in perspective. Always important to put things in perspective. It's especially from a longer term view. So what you're seeing here is my website. I'm going to use this here today. So I'm going to go to the charts section. And in the charts section, I've shown this chart before, but all of these charts, by the way, in here update in real time. So when the market's open, they will reflect the actual price as the market progresses. What I want to show to really hammer home this point is the M2 money supply. So for those of you that have been watching for a while, you'll remember that another subscriber said, M2 money supply, there was an article that dropped by 5%. That's never happened since the Great Depression. So is that an indication that we are headed for another Great Depression? We might be, but not right now, we're not. But it's important to put things in perspective. So if you'll see what happened with money supply because of the pandemic, when nobody was going anywhere, no one was spending any money, everyone was putting it into savings, the money supply spiked dramatically. And most of this is because of the pandemic. But then as people started spending money and started taking that money out of savings, then naturally the money supply started to decline. And it went down 5%. So that part of the article was true. It did go down 5%. And it has never gone down 5% since the Great Depression. That part is true as well. What was not mentioned is that we haven't had a 100-year pandemic in that period either. So if you'll track the trend starting from the last debt ceiling crisis, which is in 2011, or you could go back all the way back 33 years, either one of these lines, you can see what the normal trend of M2 should have been. And if we just take the one from 2011 right here, which is the higher one, we actually still have another 15% we can decline just to get back to normal. So just taking an article that says the money supply has declined by 5%, hasn't happened since the Great Depression, by itself is not enough. You have to put it in perspective with what the long-term trends have looked like. And when you do that, you'll see that we are still above normal. Now, let's talk about the money flow out of equities. First of all, let me show you my website. If you're interested in receiving the newsletter, just go to breakpointtrading.net. Click on the little button up in the upper right-hand corner that says this week's newsletter. It will then walk you through the process of signing up. I went through this in the last session, so you can watch that video for more details. But you have to do more than just sign up with your email. You also have to subscribe to the $0, no-cost, free newsletter that does not ask for a credit card. But you still have to click on the button that says subscribe to the free newsletter, because until you subscribe, you still won't be able to get to it. So watch the last video if you want to see more details on that. Breakpointtrading.net, that's where all of these charts come from. Now what I'm going to do is show you another example, a couple of more examples, before I actually get to the money supply question. A couple more examples about putting things in perspective. So here's a chart right here. And if you looked at just this chart, you would have to say, man, this stock is going to the moon. That's a huge run up. Big, huge spike right there. You know, be nice to be in it down here, but you know, maybe the run is over already, but this thing is spiking way, way up. But when you step back and put it in perspective, there's what it looks like. This is Palantir, by the way. This is about a week ago. So when you put this little spike in perspective, you can see how far this has fallen just to get to this point where it spikes. So you have to look at things in a wider view than just that little piece right there. Let's look at another example. This might be controversial to some of you, but it's another example of what I'm trying to illustrate here. It's a little blurry, but here's another chart. Looks kind of like that one for Palantir, where it's got this huge spike right here. It was going along, kind of going sideways for a while, and all of a sudden it's spiking way up. Now, this is not a stock, but let me put some time frames on this and maybe you can guess what it is. This is 1600 AD, and this is the present. This is a view of temperatures on the Earth from 1600 AD. Now, you might say by looking at this, we're in big trouble. It's warming, it's spiking, it's warming too much. But if you put it in perspective, that's what it looks like. So here's the spike from 1600 AD until right now. In perspective, historically, with all of the other times that there's been global warming. And you can see pretty clearly that, yes, we've got a significant spike, but we're nowhere near where it's been in the past. Now, let me take that idea and now go back over here to my website. And now let's take a look at weekly trend analysis. So this section down here is are some of the charts that I look at every week. Actually, this whole section, weekly analysis. So I look at the sectors, see what sectors are going, Keltner charts, etc. But these weekly trend analysis charts down here, and let's use NASDAQ. One of the things that I put in this, and this is in the newsletter too, by the way, this week. One of the things that I included in this, I'll try to make this a little bit bigger, is money flow down here at the bottom. And the gray area equals 1 week's worth of data. The blue area equals 4 weeks worth of data. So what you can see down here pretty clearly is, yes, money flow has been negative for 6 weeks. However, on a longer term 4-week period, it is still positive. So again, it depends on your perspective. Don't just read an article that says money flow is negative, and that means we're headed for a crash. Put it in perspective with where that has been in the past. And if we look back over last year, 2022, when the market declined significantly, money flow, the decline in money flow right now is actually higher than 2 different times from last year. Now, it is significantly lower than the big rally from 2021, but I believe we might just be starting the rally here. So the first thing I'd say is, yes, money flow has been negative for 6 weeks. Does that mean the market's going to crash as a result of that? Well, there's no data based on this that indicates that, at least not yet. You can also look at the long-term trends down here, the bullish trend. This is a longer-term trend. The medium-term trend is also still bullish. The short-term trend is bullish, but barely, just barely hanging on. In fact, the medium-term trend is starting to trend a little lower now as well. I mean, that could drop below 0. But the long-term trend is still pretty positive. And the money flow is also still pretty positive. Now, notice when money flow went positive. When the long-term 4-week money flow went from below 0, which it was pretty much all of 2022 when we had this bear market, And then when it went back above zero, it was right here in January, right when this rally began. So money flow is still positive. And these vertical lines are basically where this particular indicator turns from red to green. And it can give you a long-term indication of where the market's headed. Right now, it is still bullish. All of these long-term trends are still bullish, but it's something that we will watch. And I'll actually bring this chart up again from time to time when I'm talking with Zuber, and we can track it and see how it's doing. Now, we can also look at the S&P weekly trend analysis, same kind of deal. Money flow for 6 weeks has been negative, but the longer term trend is still positive. The market is still heading higher. And that will be the case until things really change. And in fact, especially if we get below that 21-day moving average, which can be found here in the Keltner charts. So here's the S&P. Right now, when it gets to this third 3x average true range, that is an extreme level. Doesn't stay there very long, and usually likes to come back to the mean, which is the middle. Sometimes it'll drop down to the next extreme level below that, and then come back to the mean again. You can see right now we're right at the mean. So the market is making a decision, trying to decide whether it wants to continue that rally higher or whether it wants to go down and hit these extreme levels. Now, notice where the extremes are right now. Somewhere between, somewhere right around 43.50, actually. So if we do start to sell off again, we could very likely get back down here to 43.50 before another rally occurs. So keep that in mind. NASDAQ, Keltner chart, same kind of thing. It's right back at the middle of its range. So we'll have to see if it's going to stay there. September is a dangerous month. Look at the last video. I've explained that pretty well. But we'll see how that does. Again, we'll look at these as we go along. And then intramarket breadth analysis is also important because it shows the relationship between, in this case, the S&P up here and the NASDAQ versus the S&P. And if you want to beat the market, then you want other things. You want to be invested in things that are beating the market. So invested in things that are outperforming the S&P. And when these trend lines are rising, then this particular first indicator right here is outperforming the second indicator. Right now, it's moving sideways. Growth versus value. It just peaked. And the market has been coming down. Growth still was supporting the market, but it has peaked and hit the top right there. So we'll have to watch that. Russell 2000, which are small caps. That one is actually dropping through the channel line at the bottom. Mid cap versus S&P down near the bottom. Small cap again dropping through the bottom. So these areas of the market are not participating. If we go historically, the end of the year, historically value typically outperforms growth. If that happens again from October to December, then we really need for these areas to start participating so that we have better breadth across the market. So we need to watch these as we get into the rally period after the end of October. It's still going to be dangerous between now and the third week of October, I think. But once the rally might start to take off, we need to see these other areas participating as well and included in the rally. So that's basically all I have. I'll just very quickly, since we have a little bit of time, I'll very quickly step through the Magnificent Seven just to get a sense for what their charts look like. So here's, again, this is all on the website. There's Google. Still looks pretty good. It's hanging out near the top of its range. Alphabet. Oh, I just did that one. Amazon. Trending lower. So, but still, hanging in there near the top as well. So we'll have to watch that and see if it can break out. Apple had a terrible week in fact, 2 days in a row. You can see this big sell-off on Apple. Apple went right down to the support level. And by the way, this line right here, I drew this line in when it hit this level right here. That's when I determined where support was. and then Apple started to take off, I did not move this line. You can see where Apple came back to. Hit it almost exactly before it started to trend a little bit higher. But Apple had some really bad news out of China where they're not allowing government agencies to use Apple phones any longer. So Apple got hit pretty hard right there. Now you might say that's a great time to buy Apple because it might start to trend back higher. We'll see. Meta is just sort of hanging out in the middle, right at the 50. All the moving averages are at the same place, 21, 8, and the 50-day moving averages. So this is a moment of decision for Meta. This is the time where it's going to either roll over and it's got to go down to 280 is where the next support level is, or it will make a run for new highs. Microsoft, same thing. All of the moving averages are right around the same area, although to its credit, the 8-day and the 21-day are both trending higher. You can see the 50-day is still trending lower. So again, this one needs to make it through this next support level of 340 if it's going to move higher. All of these are in danger over the next week or so. NVIDIA had a sell-off down to its 50-day moving average. That's typically the area where big institutions will step in and start buying. So we'll have to see. The momentum indicators are rolling over. So we'll have to see if NVIDIA can hang in there at the 50-day moving average, or if it will follow the rest of the market over the remaining few weeks of September and into October. The next level is $400 down here. For Tesla is hanging out right here at this support level. Its 50-day is trending down a little lower, but the 8-day and the 21-day are moving up, which is good. But it's also consolidated and stuck right in this congestion right in here. So it's a big test. It's below its 50-day still. So it's a big test for Tesla to see if it can break out and get above that. The next big support level is down here at about 215. And then the two other ones that I added in beyond the Magnificent Seven are Netflix. Netflix is back up here at its resistance level. It's hit here a number of times. One, broke through there, hit it there, hit it there. It's hitting it here again. So if it breaks through, that will be very positive for Tesla. And then AMD also trending lower, not looking very good, below its 50-day. Its 8-day is starting to roll over now. And the big support level now for AMD is at $100. So keep that in mind. By the way, on Tesla, if we go up here and look at automobiles under industry groups, these are weekly charts. But you can see for automobiles went down and hit both the 50-day and the 200-day almost exactly right there. And then is now starting to move higher. So automobiles as an industry group, which Tesla is in, are actually starting to outperform. They're outperforming the S&P, which is what you want. And they're starting to look a little bit better. So we'll see what happens if September doesn't give it any help, but we'll see how that pans out. So that's it. If you're interested in getting my newsletter, just log in to Breakpoint Trading. Every week, all you'd have to do is just log in Breakpoint Trading. What I do is I just put it up here as a link right up here on my favorites bar. I go in here and click on clear for this week's newsletter. And there's the PDF. You just click on the PDF and you've got the newsletter. So everything you're used to seeing in the newsletter, all of that is right there once again. So that's it for this weekend. Hope you have by the way, for those that use VectorVest, the founder of VectorVest, Dr. Bart DeLito, died last week at 92 years old. And he was an engineer and created VectorVest because he felt that he could use engineering and math to determine fundamentally sound companies. And that's what VectorVest is based on. He started the company when he was 55 years old. After he retired from his full-time job at 55, then he started VectorVest. And VectorVest is thriving now. So he's kind of a hero from that perspective as well. You know, it doesn't matter what age you are, you can still do really well and be very successful. So Anyway, that's the newsletter. I hope everyone has a great weekend. Have a great week. Next week is CPI. Watch the last video if you want to hear more about that. Could be a higher CPI number, which will not be good for the market, I don't think. So that's it. Thanks everyone for joining, and we'll talk to you next week. Hopefully Zuber will be back.